Good morning, everyone. So today we're going to be looking at a private company, which is another form of ownership. And it can be a small or large company, but has one or more directors. So what are the characteristics of a private company? So as I said, there are one or more directors. Likewise with shareholders, one or more. They need to register with the Register of Companies by drawing up what we call an MOI, which is the Memorandum of Incorporation. Remember, and they register at succes, which is the company's Intellectual Properties Commission. The company name must end with the suffix PTY LTD. A private company is not allowed to sell their shares to the public. So in other words, if they are wanting to sell their shares, all the existing shareholders need to be in agreement with who those shares are being sold to. So it can't just be any member of the public. Investors put capital in to earn profit from their shares. The company has a legal personality as well as unlimited continuity. So in other words, the company can sue and be sued. The company can enter into contracts. And because the number of shareholders may change, the company continues to be owned as a PTY Limited. The auditing of financial statements is, however, optional. The profits are shared in what we call dividends, right? So the shareholders are paid out in dividends when profits are made. Shareholders, and please note I'm saying shareholders are not the company. The shareholders have limited liability. So they will not lose their initial capital invested if the business goes bankrupt. Their personal possessions will not be attached. Shareholders have this limited liability because they are a separate legal entity to the business. Raising of capital can take place by issuing more shares to new shareholders. And as I said, the profits are shared as dividends. So these are the characteristics you would have learned in grade 10. In grade 11, we look at the advantages and the disadvantages. So the first advantage is that there are more opportunities to pay less tax. It's a good long-term growth opportunity. The own legal identity and shareholders have no direct legal implications. So in other words, the owners or shareholders have limited liability. There's a board of directors who have expertise in certain areas and they are appointed to make the decisions for the business. You're not required to file annual financial statements with the commission, so this costs you less. Remember, as an advantage, the business is the legal person and can sign contracts in the business's name. The new Act forces personal liability on directors who knowingly participated in carrying out business in a reckless or fraudulent manner. So that means directors are held accountable for any fraudulent activity. And lastly, because the business is the legal person, as I said, they can sign contracts in their own names. The disadvantages is that to start this business requires a lot of capital. And because you have more shareholders, the profits are shared between more people, and so you can get less profits out. There are definitely more tax requirements, and the company has to pay company tax. Directors do not have a personal interest in the business. Right? And because the annual financial statements must be reviewed by a qualified person, this costs more for the business. It's difficult and expensive to establish as the company is subjected to many legal requirements. Let's now move on to the grade 12 curriculum. Remember, here we are wanting to know what are the factors that lead to the success or the failure of a business. So looking at capacity, the success factor is that, remember, there is no limit to the number of shareholders, so the business can easily expand and grow. The failure of this is that it cannot grow into a very large business because it cannot invite the public to come in and buy shares. Remember also, as a disadvantage, is there's a lot of legal work such as the MOI that needs to be completed. If we look at taxation, The success is that it can obtain tax rebates if they are involved in any CSR projects. They can also obtain government tenders and renew their licenses if they do not evade tax. The failure is that they are subject to double tax. So, in other words, shareholders pay secondary tax, and this can have a negative impact on the company if it is already financially struggling. In terms of management, the positive is that it is managed by at least one competent and highly skilled director. The negative side of it is that directors may not have a direct interest in the company, which can then hamper the growth and the profit of that business. Moving on to the division of profits. So, as we said earlier, the shareholders get paid out a dividend, so a share of the profits. High profits and good returns to shareholders indicate the success of a company, which increases the value of the shares. The downside is that the shareholders may sell their shares when the dividends are low, resulting in a drop in the share price. Now we look at capital. Remember, capital is the money or the intellectual property that is invested in the business. So the success is that a large amount of capital can be raised since there is no limit to the number of shareholders. The negative side is it cannot grow into a very large business since it cannot invite the public to buy shares. And because there is a restriction on the transferability of shares, you may not attract financially strong investors. Moving on to legislation. Remember, the procedures to form a private company have been simplified by the new Companies Act. So the simplified procedure is a success factor. The limited liability allows for greater risk taking, which may lead to the business growing and expanding. The negative side of legislation is that the formation procedures are time consuming and complicated, and you do need to seek legal advice on this. The high formation or establishment expenses require large start-up capital. And that, ladies and gentlemen, is the end of success or failure factors that you will need to know for a private company. Have a good day.